Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, the co-founder at LikeFolio. Welcome back to the show, Andy.
Happy Friday.
Happy Friday to you. Happy Friday happy week for Carvana investors.
Yeah.
They came out with an update for Q2, said their path to profitability is starting to improve. They raised some metrics, maybe some margins might be an improvement here. But that 56% rally yesterday, Andy, that just had all the red flags of a short squeeze to me. What kind of data do you guys have out of LikeFolio?
Yeah, I think it absolutely was a short squeeze. And, just before we even get going, I have to put the caveat in, you never know when a short squeeze is actually over. We've seen these carry on for sometimes weeks in the past. So got to be careful with this one. But from a data perspective at LikeFolio, we understand that the company may be pivoting to a new reality and, actually buying cars for less than they can sell them, and we think that's great. But the overall trend in terms of buying cars online, we're really seeing a consistent decline in consumers' ability to do this. There's just less transactions going on. We do see a renewed interest over the last 3-4 months, but still not back up to where we were a year ago in terms of people talking about buying a car online. It's just a lot more expensive because of interest rates, and the consumer's pretty tapped out here. When we zoom in on Carvana specifically, we see a very, very severe drop-off in people talking about purchasing cars from Carvana. So I think while the company put out a positive note, I think they probably collected some receivables and have a better financial outlook. I really don't think that the business itself is operating at nearly the levels it was a year or two ago. There's just a lot less consumer demand to do this type of thing. I think Carvana is a clear leader in this space, is a very good company in terms of delivering on its promises, and all of the infrastructure they have is really very good. But the consumer is tapped out, the used car market is tough, and so I think we're going to see a serious decline in volume, but a renewed interest in actually making money on each transaction, which is probably what Wall Street was really hoping to hear and is good news as we see in the stock price.
So Andy, because it sounds like at least you kind of see something in this concept, because my biggest issue with this company has always been it seems like they're trying to reinvent the wheel, but then they didn't do anything. I guess the fact that you can now buy a car sort of seamless online, but they're not the only ones that does this. They might be the leader. To me, this is a space that has largely been mature for a while. CarMax comes to mind as the one that kind of dominates this space of the used car market. What do they have? Well, they have tremendous scale and an ability to most of the time do as you said, buy a car for less than they're selling it for. I'm sure they mess up sometimes. Sure they buy some cars they wish they didn't buy. And I'm sure they sell some cars sometimes that they're like, I don't know how we sold it for that price. That being said, Carvana is not making any money as it stands right now from an earnings standpoint. And that chart that you just showed looks like growth isn't going to be there either. So as an investor, potentially, what am I seeing here that gets me excited? Because what we've learned over the last few years, at least in the low interest rate environment, was I pay for growth. And it looks like I'm not getting growth or earnings out of Carvana.
I completely agree. I think that there's, the one reason I think to buy Carvana stock today is because you think someone who sold the shares short has to buy it back tomorrow. The short squeeze is kind of the only reason I think anybody should be looking at Carvana anywhere above $13 to $15. We don't see any reason to think that Carvana's growth will resume anytime soon. And in fact, the entire industry, we see red flags all over this. So, from a trader standpoint, I think it's a difficult stock to bet against because of the short interest is in the 50% range of the float. That's a lot of forced buyers potentially out there. But from a investor standpoint, from a long-term standpoint, there's just absolutely no way I would be chasing it up here.
Yeah, and that's the concern. You mentioned this earlier, Andy, when we talk about these stocks and the amount of short open interest out there in this name. I believe it was over 60% for Carvana still at this point. So when you look at this as a tradable product, we've seen the GMEs, the Bed Bath & Beyonds, the AMCs that remain elevated for a long time. So when you look at this and your data says one thing, that you always have that caveat, right? That hey, you guys got to realize that they're still not making money, and my data says that hey, it's not getting any better right now.
Yeah, and from a trading standpoint, I think the clearest message I would want to get through to people is that you don't have to trade this stock.
Yeah.
It's kind of a trap, and I think this is one of those situations, a lot like GameStop, a lot like Bed Bath & Beyond. We've seen a few of these occur, and it really is just a situation where the company was sold short heavily for good reason, and that's because the business is deteriorating very quickly, and they don't have a whole lot of cash on hand. Now they say they've got some cash coming in. They're going to live to see another day, and it breaks up that trade, and people are forced to buy in. So from an investor standpoint, I would say definitely stay away at these levels. If you're a trader, and you've got a risk appetite for, a 50% drawdown, then I think that there's a possibility of a short squeeze continuing, but that would require the NASDAQ to play along for quite a while as well. So I think, my takeaway here is from a LikeFolio perspective, from a data perspective, this is not a business I would want to be in right now. And Carvana is no exception to that, yesterday's good news aside.
So Andy, as someone who's started several businesses, as someone who's looking at this data from that investor perspective, what would have to show up either in the data from a management perspective? What would have to happen for your sentiment to change? Because it seems like a lot of negativity is swirling around this conversation.
Yeah, the stock price would have to change. I think that the stock price has to be $10 to $12. It's got to be about half of where it is in order for me to think Carvana is worth betting on. I do think it's a good company. I think that they deliver on their promises to the consumer really, really well, and they have a really efficient and what is supposed to be a low inventory overhead model. They got a little bit ahead of themselves, and it really cost them on the greed side when things were booming. And so now we're flushing all of that out. But I think it's a good company, and I think that online car buying will be back, and they will be a leader. But, the price is just double or triple where it should be in terms of the valuation of the company. So that's what you have to wait for.
Yeah, and a lot of times that takes a while to come to fruition, as we've seen in the markets over our careers. All right, great stuff, great data as always, Andy. Have a great weekend.
You too, thank you.
All right, that's Andy Swan, co-founder at LikeFolio, joining us.